we have had the latest government borrowing figures. We learnt that borrowing in August came in at £11.6 billion. That was up £3.5 billion on August last year, but it was below the £13 billion that had been forecast by the Office for Budget Responsibility. It means that during the first 5 months of the current financial year, the government borrowed £69.6 billion, which was up £19.3 billion on the same period last year, but some £11.45 billion less than the OBR had expected. Well, joining me now, Shamik Dar, Chief Economist at BNY Mellon Investment Management. Very good morning to you, Shamik. You expect the bank to raise today. Why?
Yes, I mean, I think there's still plenty of concern about the labour market, fundamentally. I think it was made pretty clear in the last minutes that was the centre of their concerns, and wage inflation is still 8% or above. And I think, on balance, that means it's a finely run thing, and I could be proved wrong within half an hour. But my sense is that they will raise another 25.
You're not persuaded by the fact that there are signs that the labour market's softening. You're seeing a drop in employment rates. You're seeing a drop in vacancies.
There are absolutely those are important signs that the labour market's weakening. We've also had some relatively weak GDP numbers out of July. I think all of that adds up to a very finely balanced decision. But at the end of the day, with wage inflation at 8%, that's just not consistent with a 2% inflation target in the longer run. So I think one more hike makes sense from here.
We obviously had a big drop in core inflation, 6.9 to 6.2%. Is that something that the MPC might look at more closely? Because, I mean, that suggests that domestically generated inflation is on the wane.
Yeah, absolutely. And if you look at the 3-month rate of core inflation, that's more like 3%, which is within touching distance of where they want to be. I just think that you need maybe another month or two of this. And frankly, given that the bank was possibly a little bit too accommodating for too long, I think they will probably err on the side of caution at this stage and put another 25 through. But you're absolutely right to say that things are sort of looking a lot better and pointing in the right direction.
Obviously, the Federal Reserve kept rates on hold last night, but the accompanying commentary was quite hawkish. Would you expect if the MPC stays on pause this month, we would get something similar?
Yeah, I think if we get a pause, it'll be a hawkish pause. That's what we got from the Federal Reserve. It's also what we got from the Swiss National Bank. The ECB raised last week and said, they were probably done, but they're not absolutely certain. And we've seen the Swedes and the Norwegians raise rates this morning. So everything's kind of in that sort of last stages of getting towards the peak rate. But I think, broadly speaking, we'll get one more.
Worth pointing out, looking at your research, you still expect a recession in both the UK and the Eurozone.
Sadly, yes. And I think that's because, frankly, we've reacted late to the inflationary shock. And I think we've got to the point where you almost need a recession to get inflation back to target. It's a sad thing to say, but I think that's where we are. I think it's probably likely in the US as well, slightly odds on, but much less likely in the US than in the Eurozone and the UK for various reasons.
Before I let you go, word on the government borrowing figures. I mean, you're going to get some Tory backbenchers saying, come on, this means we can have some tax cuts.
Yeah, well, it looks like the Chancellor could have, 15 to 20 billion pounds to play with by the time of the budget. My suspicion is, though, that he too will be cautious because at the end of the day, if we are going into recession, it's not clear how long that good news will last. So my sense is that they don't look out for much in the way of big giveaways at the budget.
All right. Really busy morning for you, Shamik. We do appreciate you joining us. Thanks
you. Thanks very much.
And we will, of course, be bringing you live coverage of the Bank of England's decision from midday here on Sky News. Now, the Cooperative Group has narrowed its half-year losses despite intense competition in the grocery market. The organisation, which is owned by its 4.58 million members, reported a pre-tax loss on an underlying basis of £9 million for the 6 months to the 1st of July, which was down from £68 million in the same period last year. But year-on-year comparisons are difficult because the Co-op has since sold its petrol forecourt business. So when I caught up earlier with Shireen Khoury-Haque, the chief executive of the Co-op, I began by asking her what had been going on beneath the surface.
We've remained very rigorously focused on 4 key priorities, which have been to deliver on our plans, to accelerate our growth, to support our members, colleagues and communities across this cost of living crisis, and to improve our efficiency and our expenses across this year. On a like-for-like basis, despite the sale of our petrol forecourts, every single one of our businesses have grown compared to the the first half of last year, and cash generation has improved. We've also reduced our expense base, which has meant that we've been able to cover around £117 million of extra cost while investing heavily in prices, 20 million in the first half, and then we've announced another £70 million investment for the second. You'll also have seen that we've reduced our debt year on year by 83%, and our membership recruitment has increased by 55%, again, on a like-for-like basis. So we're incredibly pleased with our performance in the half year.
Sales in grocery up 4%. To what extent is that flattered by inflation? What's been happening on volumes?
You'll know that due to inflation, volumes across the entire sector have gone down. We have 4 channels into the grocery market. We have our stores, we have our wholesale business, we have franchise, and we have our online. And each one of those areas has shown growth. We're actually exceeding the market at the moment on volume sales in all of those channels, and we're very, very pleased about that. But the entire market has dipped because of the cost of living issues that we're all seeing at the moment.
Do you see any light in the end of the tunnel as regards food price inflation?
I think you'll have seen the inflation figures, and you'll have seen that food inflation has gone down. But unfortunately, that's been because of organizations like us investing themselves in prices. We have not actually seen commodity prices come down yet. So no deflation. We've seen an easing in inflation, but we do continue to see inflation in core areas. And even where there is reduced inflation in commodity prices, we have not seen that yet transfer to cost of goods. So it's going to be a while, and I think, until we can see prices coming down for retailers in terms of the costs that we purchase.
Obviously, you have a very big funeral care business as well. Revenue's up in a very competitive market. What's been happening to death rates?
And thank you for asking me about the funeral business, Ian. It's not often mentioned. It's not mentioned often enough, actually, considering the importance of the business. So the death rate has been up in the first year. Our volumes have been up over 7%. Our revenues grew by 5.8%, and we saw a market share increase. Now, if you look at what's been happening across the funeral market, COVID had a huge impact in that people were not able to have the sorts of funerals that they would have wished for their families. And we're seeing some of that persist in that 1 out of 7 families now are choosing to have much more simple funerals, and they're choosing to go direct to cremation. In the easing of the COVID restrictions, there have also been some families who've been glad to get back to traditionally big funerals. Now, there are a couple of things that we're doing in our business. First of all, we're trying to change the societal view in terms of discussing death and people's death wishes upon their death. And you'll have seen that in some of the campaigning work that we've done and some of the recent advertising. And we're also looking to provide some innovative, different solutions for families. And that includes the introduction of water cremation. We're the first in our market to offer that. It's also called resumation. And we believe that that could signify the biggest shift in terms of how funerals are chosen in the last 120 years in a quite traditional industry.
Some other business news stories for you now. And the chief executive of Next warned this morning that the recent softening of the labour market could hit consumer demand in coming months. Well, Lord Wolfson was speaking as the fashion retailer reported a pre-tax profit of £420 million for the 6 months to the 29th of July, which was up 4.8% on the same period last year. Next also upgraded its full-year profit guidance for the 3rd time in 4 months, predicting that inflationary pressure on both selling prices and operating costs will continue to ease. The shares are currently ahead by some 2.25%. Toshiba, once one of Japan's biggest companies, has agreed to a takeover valuing it at $14 billion. The 148-year-old industrial conglomerate, whose activities span power stations, electronics, electrical equipment and information technology, is being bought by the private equity firm Japan Industrial Partners. The takeover follows years of battles with activist investors, which began when, 8 years ago, it admitted overstating its profits by as much as $1 billion. Well, JIP's other deals in recent years include buying Olympus's camera business and Sony's laptop computer business. The furniture retailer and manufacturer DFS said this morning it expects the upholstery market will continue to weaken before it gets better. The UK's biggest sofa retailer said upholstery market volumes were down 15% from pre-pandemic levels and said it expected a further 5% decline before a recovery set in. Well, the company, which also owns the Sofology brand, was reporting a 49% fall in pre-tax profits to £29.7 million for the year to the 25th of June. The shares, I can tell you, are currently ahead by some 8%. That's on news of an expected improvement in margins. It's a busy day for retail today. Shares of JD Sports have risen by more than 6% after the leading retailer of sports fashion and outdoor brands reported better than expected results. With JD, which has benefited from demand for lines such as the Nike Air Force One and Adidas Gazelle and Samba footwear, reported a pre-tax profit of £375.2 million for the 6 months to the 29th of July. That was up 25.8% on the same period last year. Well, sales grew most strongly in Europe, which I suggested to the chief executive, Regis Schultz, might surprise people given the economic backdrop.
I think, the sneaker trend is everywhere, and I think that we can see, brand shoes, as we call it, moving to sneaker, and that is driving our long-term growth. And at the same moment, we are opening stores, and in Europe we are. It's new, so we are new, in fact, and getting a lot of market share. And I think we bring something which is unique, which is really the head-to-toes offer that we have, which doesn't exist in Europe.
Your margin was down in the UK and Ireland. Was that down to the cost side, or is it down to the fact that you're having to be more competitive on price? It's
more on the cost side. We have invested a lot in our sales assistant pay, so we increased around 30%, 30, in UK. So we invest 45 million in our people. So that's mainly what is driving that. You mentioned the store openings. You're opening 200 stores, I think, this financial year. Yes. Which are the territories you're targeting most? So it's US and Europe. That's more than around 100 in US and 100 in Europe. And in Europe, this year will be Italy, Spain and Portugal. And what's happening with store opening costs? So store opening costs are part of our cost, and it's mainly impacting more Europe and US P&L. Right. What about the relationship with the big manufacturers? I mean, they've gone up and down over the years. It seems like they seem relatively convivial just now. Yeah, no, I think that they understand the value created by a multi-brand retailer, especially in lifestyle. It's very rare when you are in lifestyle that you have only one brand, so you will mix brand. And I think that the right offer for the consumer is a multi-brand offer, and we do that better than anyone else. Now, this period covers the period up to the end of July. What's happened since? How was the back-to-school season? Very good. So we continue on our trends. We are double-digit growth for the last 7 weeks. So we are bang on what we deliver for the first half. So we feel pretty confident for the full year. Now, the market's been very fixated on shoplifting, particularly in the US with Dick's Sporting Goods, with whom you have a partnership. People seem to be assuming you have those problems that they do in the United States. What's the situation? Yeah, it's very different. So Dick's store are very large store, very big store, and they have product on the shop floor. Our products, the most valuable product, which is footwear, are not on the shop floor, so they are not available for the consumer to pick up. So we see an increase, and a significant increase, but from a very low base, so it's not significant on our profit. Is the UK government and the authorities doing enough to deter shoplifting and punish shoplifters? I think that better than the US, still not as good as we could do. I think, why it is important, I think, is about the society. If you let that go, after that, you have another impact on the society. So I think it's something that we need to take seriously and really to tackle. And I think the most important things for us is the security of our people. So we need to make sure that it's secure for people to work in store. And it's not only about the goods, it's about the people.
Obviously, during the period, Adidas have had issues with Kanye West. They stopped selling his branded goods. Did that result in a stock overhang? Has that made trade difficult?
No, all the stock has been taken by Adidas, so we don't have any issue on stock on those products.
You've interest in the Gulf states as well. What about what's happening in Saudi Arabia?
So we are operating. So we have just signed a franchise contract. So we will develop there, but it's early days for us. So I cannot speak about it.
Right. Okay. And what about the loyalty card launch? You're promising that for October next year, I think. It's only going to be in the United Kingdom initially.
So we are live in Manchester area in 10 stores now, and we will be live in all UK in October this year. So it's coming. And next year will be Europe.
Right.
And we're already live in US.
What about the inflationary outlook? What are you seeing there?
I think we see we don't see the inflation is going down, and I think that supply chain is back to normal. Energy prices are still up and down, but they are on average on normal. So we don't see inflation continuing on the same pace as it has been.
I mean, it's been very well noted that the demographic that you specifically cater for has been less impacted by inflation and the cost of living crisis. What about the other demographics that you serve?
I think the main element on this is unemployment, and unemployment is ever low. So I think that the young adults, they get a job, they get a salary which is higher than ever. So, and I think that they benefit from that. And I think that we see that, and this is our critical customer base.
And I can tell you JD Sports shares currently up some 6.75%. Well, coming up next on Business Live, we'll have a look at how the markets are doing this Thursday morning. Stay with us. Has rallied, moderation, interest rates peaking.
I'm up at 6%.
The highest for 14 years.
Will that be the peak? Will it be a little bit lower?
It's closer to a potential crash.
So many words, so many meanings. But what do they mean for you and your finances? Stay up to date on Sky News.
I'm Martha Kellner, and I'm Sky's US correspondent based here in Los Angeles.
It's turning everybody into, a crazy, violent drug addict.
How are you feeling?
I am angry.
Are you a hypocrite, sir? Will your candidates win?
I hope so.
I gotta be realistic. My sister's dead.
More than 4 weeks on, there's no murder weapon and no suspect. Mum, how are you feeling today?
Jeffrey said, you answer to Ghislaine, you just don't cross her.
You're so excited.
Severe nightmares of these people coming in and just taking me in the middle of the night.
I've watched as whole towns were torn apart by natural disaster.
I'm alive and I'm thankful for that.
We take you to the heart of the stories which shape our world.
A lot of cases that I know are reported from Ukrainian missiles themselves.
Ambassador, with respect, I think that's preposterous.
Fly Emirates. Fly better. Fly Emirates. Fly better.
Thank you.
Well, the big events in markets during the last 24 hours has been the US Federal Reserve's decision last night to keep interest rates unchanged, although the accompanying commentary was hawkish. That lifted the US dollar, while the pound has been trading to the downside ahead of this lunchtime's interest rate decision. Sterling today hit its lowest level against the dollar since the 3rd of April. It's off just over a third of 1% now. It's also off a quarter of 1% against the euro. On the equity markets, Wall Street finished lower on the Fed's comments, and that was followed by a sell-off overnight in the Asia-Pacific region, in which the main indices in India fell for a third straight day. In Europe, stocks are also trading to the downside this morning. We've had interest rate rises in both Sweden and Norway today. The French vaccine maker Valneva is off 3.5%, despite reporting a narrowing of half-year losses. Well, here in London, the FTSE 100 is also in negative territory right now, off nearly 0.75%. The mining heavyweights are weighing on the index. The leading blue chip fall in percentage terms, though, is Ocado. It's run into a bit of profit-taking after its gains earlier in the week, and that's been triggered by comments from one of the brokers, currently down by some 8.5%. Outside the FTSE, the catering group SSP, you might recall we had the CEO on the programme fairly recently, it's off by 6.75% on a trading update. There are some gainers, though. And the outsourcing specialist Capita, look at that, it's barely changed. That was ahead by 0.5%. It's got a trading update. It's got a contract winner announced today as well, I think. The oil price, meanwhile, continues to drift after its recent strong run. A barrel of Brent crude will currently set you back $92.55 a barrel. That's off 1% on the session. Well, joining me today is Rob Bergman, Senior Investment Manager at Brewin Dolphin. Rob, it'd be rude not to start by asking you what you think the Bank of England's going to do today.
It's going to be a really tight call, isn't it? Unlike your earlier guest, I think probably they're going to hold, but who knows? I mean, the bottom line, though, is it doesn't matter whether they go up or whether they go down in the longer term. I think the message we're getting from the Fed, the message we're going to see here is that interest rates are going to stay higher for longer, and that has bigger implications.
Yeah, and also on corporates as well as households.
Yeah, exactly that. So you've got companies like Strix today. Strix make the kettle elements. To go to monopoly, really, in what they do. They're sharply down. They came out with a statement, cut their dividend. They're looking at ways of tackling their debt. And this is the message, isn't it? That the companies that have benefited from very low interest rates to grow have got quite high borrowings. And like people who've got fixed-rate mortgages, these companies have got fixed-rate borrowings with their banks, and as these are coming up for renewal, the rates that they're being offered are, as you can imagine, much higher than they were 2-3 years ago.
Is this something that you're going to be looking for as an investor in coming months, then, the gearing levels in businesses?
Yeah, very much so, very much so. And it's how they manage that. It's gearing against cash flow, isn't it? Because you have to, debts can be a good thing, but you have to be able to service it.
Yeah, it was very interesting talking. I mean, obviously they're unquoted, but the Co-op was stressing to me earlier on, they brought their debt right down following these asset sales. I mean, that's what some businesses are going to have to do.
Yeah, I think so. And you've seen other companies who are actually doing equity raisings. So companies like Dialight, I think, came out last week and said, we need to raise some money, or we're exploring this with our shareholders. And I think this is a trend you're going to see more of.
But it's not. I mean, as a young man, I came into this business about 30 years ago, and every single corporate you spoke to in those days, they'd all stress their gearing levels because we were just coming out of the early 90s recession. It doesn't feel that bad. The companies aren't as stretched as they were back in those days.
No, but you've had a 15, 20-year period of ultra-low interest rates. And I suspect, actually, if I'm honest, I suspect we're more likely to go back to that kind of environment of the 90s, where interest rates become more dynamic, inflation is a bit more embedded, and gearing does matter.
Are there sectors that you'd be particularly worried about? Are there levels of gearing higher in some sectors rather than others that would?
Yeah. I mean, there are, of course. I mean, financials generally have higher borrowings, but that's just a function of balance sheets, really. But any industry can have companies which have got higher borrowings than others, and it's what are you doing with that? How is it fixed for? How is it backed by your profits and cash flow?
What about the commercial property sector? Because, I mean, that feels to me, looking from the outside in, it feels a lot less aggressively geared than it was in the 90s.
Yeah. I mean, they had a number of near-death experiences, didn't they, over the sort of 80s, 90s and noughties. And I think they've all and house builders too. I mean, house builders, had a very tough time of it back in the 2007-8 period. Now their balance sheets are actually in pretty good shape.
We got a real rally in house builder stocks yesterday when these relatively benign inflation numbers came out today. Do you think the house building sector is possibly past the worst in terms of sentiment?
It's a tough one, isn't it? Because it's I mean, house prices are stagnant, but actually, of course, that means in real terms, inflation-adjusted terms, they're quite sharply down on where they were a year ago. And everything has a price, right? I mean, we still do have a structural shortage of homes in the country.
Yeah, absolutely. And good news on that basis for building materials companies as well, longer term.
And that's actually quite good for the economy because that's got great, it's called velocity of money, where the money just goes round and round several times.
Absolutely. Rob, got to leave it there. Thanks for joining me today. Well, that's it from me, but don't go away because coming up next at midday, we will have that all-important interest rate decision from the Monetary Policy Committee. As I say, it really is on an absolute knife edge right now. You've heard from Rob suggesting he thinks the bank will stay on hold and Shamik earlier on saying he thought they would rise. That gives you an idea of the sort of polarity of views that there is in the market right now. We'll do stay tuned for that, and I'll be back, of course, at 4:30 for our afternoon programme when we will be getting you all the reaction you need to hear from that all-important decision from the Bank of England on interest rates. Stay with us.